Question: was that a bearish stock volume signal? Question: was that a bearish stock volume signal? Let's get started. We're on a monthly chart of Owen Illinois Incorporation, the APX Oscar India, and we are on a monthly chart. We want to answer this question: was that a bearish stock volume signal? All right. So this is the stock volume that we are looking at. This is a surge in trading volume. You can see that the average volume was around 40 million shares, and now we have a surge in trading volume that is now at 58 million shares being transacted in this stock. By the way, this is a Russell 1000 component. All right, was that a bearish stock volume signal? All right, was that okay? A bearish stock volume signal. All right, here it is. All right, what do you think? All right, put your comment in the comment section. All right, let's pay attention to what is happening here on this monthly chart. We can see that the moving average 50, which is the red line, is above the moving average 200. But if you look at the moving average 200, it's not rising and it's not declining. It's horizontal. And if you look at the moving average 50 also, it's not rising and it's not declining. It's all horizontal. So whenever we see the moving averages going horizontal, it's alerting us that the market or the stock is not trending but is consolidating. All right, see here, horizontal market pattern. So what we can do is to start paying attention to the price itself, which is the number one indicator. All right, the stock volume is giving us a warning that now we have a surge in trading activity, but we must now switch our attention to the price itself. Okay, the number one indicator, asking the correct question: what is the current market pattern? The current market pattern is a consolidation. All right. Here it is, the price is consolidating between a level of $13 and a level of $36, okay? But now we see a surge in trading volume here, and we want to know whether this is, okay, a bearish stock volume signal, all right? Generally, when a stock is below the moving average 200, the first thing that's coming to the mind of traders is to sell. Right, so trader wants to buy stocks above the moving average 200, especially on the daily chart, and they want to sell stocks that are below their moving average, their daily moving average 200. However, I'm not on the daily chart today. I'm on the monthly chart, but the same rules applied on the daily chart. Okay, so here we can see that on the monthly chart, the price is below the moving average 50 and 200, but the moving average 50 is above the moving average 200, but they are not trending at all because they are all horizontal. Now the question is, was that okay? A bearish stock volume signal, all right, because the price is below the moving average 200, and now we have a surge in trading volume. Was that a bearish stock volume signal? All right, first thing first. All right, so we see a surge in trading volume here. Okay, we have two volume bars here. All right. First volume bar is relating to this, zoom into it, okay. The first volume bar is relating to this, candlestick bar, this one here. The second one is relating to this one here, and the price above the highs of those candlestick bar. All right, so far, so what can we say? Okay, is it bearish? Is it bullish? All right, because the price below the moving average 200. All right? You have to understand what we are doing when we are trading. All right? We analyze the charts, okay, and we combine the technical analysis with the fundamental. But the next thing that we can do also is to try to go into the minds of other traders to have a bit of idea what they are thinking, all right? So if you go into the mind of traders that are using a moving average 200 to make their decision, most of them will be thinking to sell this stock because they will say that, George, look carefully on your chart. Are you blind or what? There was, this surge, the first surge in trading volume has taken place here. Okay, pay attention. All right, the first surge has taken place here. All right, we have almost, similar surge. And at that point in time, if you put the vertical line here, this is the candlestick bar where we have the first surge. This one here, this one, okay? So we have a surge in trading volume there, okay? In fact, it's this one, okay? That one, the inverted doji, okay? This one here, we have a surge in trading volume, and the price went down. So if you look at this volume bar here, we will say that, oh, all right, George, can't you see it's going down, all right? They were selling it, okay? So they were selling it. So after this surge in trading volume, we can see that the price went down. But as the price went down, the price only went down to a key level. You see this low here? Where people bought it here before. How do we know that people bought it here before? The reason is as the price went down below the moving average 200 and reaches the level of $13 at this point in time. Okay, at this point in time in 2011, this stock began a bullish trend. So the stock went down from the level of $13 all the way to $36. So this is a very important support level where the smart money bought this stock, okay, at a specific price, okay. Now here we are again after the price reaches the level of $36. Then the stock start going down again, and now we are again at the level of $13. But before the price reaches that level, we see a surge in trading volume, a significant surge. There was this surge here, but not much. As there was a surge up to $45. So if you look carefully here, the average volume in this zone was around 26 million shares. And here, where my cursor is, okay. And at this point in time, we have a surge that up to 46 million shares. All right. Okay, you see that, and then we have another surge here. Okay, up to 56 million shares. All right. Now, after these two volume bar, we see that the price continue to go down and reaches the lower part of the consolidation. All right. Now, the question we want to answer is about those two volume bar here, and we want to know whether we have a bearish stock volume signal. All right. So how can we tell if this is a bearish stock volume signal? All right. We can tell if this is a bearish stock volume signal if the price confirms it. All right. So it looks bearish, because the price below the moving average 200. Most traders will think that it's bearish. But if you pay attention to the price, after the surge in trading volume, the price did not go below this low. So in order to confirm that this is a bearish stock volume signal or a bearish stock volume trading setup, all right, the price must form a new lower low below this prior low. As you can see, after this low, all right here, the price did not display a new lower low. So we cannot confirm at this point in time that we have a bearish stock volume trading setup that will generate a bearish stock volume signal. In fact, this is not a trading signal. It is a trading setup that will generate a trading signal. All right. So one more time, we can see also that the price, after that surge in trading volume, the price, in fact, has broken when above this bearish trend line. So not only the price did not display a new lower low, the price also breaks above, okay, this red bearish trend line. Okay, all right. So for the bullish momentum to continue, we must now switch our attention to the market pattern, which is a consolidation. We will also draw the median line. Here it is. This is the median line. All right. So though we have a surge in trading volume right here, looking at the market pattern itself, paying attention to the price itself, it is clear to me that at this point in time, we cannot confirm or deny whether this is a bearish stock volume signal or setup. The only thing that we can confirm at this point in time is that one can only, okay, this trading setup will become only bullish if the price finds support above the median line, which is at $24 zone. So at this point in time, all we can say to traders is this: priority to bullish signal when the price breaks above the level of $24.19, retest it and confirm it as a support level. That's the only time that we can confirm that this is that this is a bullish stock volume trade setup. It will become bearish, truly bearish, my friends. It will become truly bearish only if the price dip below the level of $13. Okay, price return back below the red trend line, dip below that level of $13, and retest that level to confirm it as a resistance level, and the price starts changing direction. It's only at this point that we can confirm that this surge in trading volume is a bearish stock volume trading setup that will generate a bearish stock volume signal. Right now, as things stand, if one is buying now, one needs to be careful because there is a resistance at $24. The bullish zone is above the $24 level, break above, retest, turn around, and one will implement a top-down trading method. Other verification that we can do is to perform Google Asset tests, check the fundamentals and economy news relating to this stock, and also paying attention to the S&P 500 itself because we are trading first the market before the financial instrument. So to answer this question was that a bearish stock volume signal? The correct answer at this point in time is no. Because after the surge in trading volume, the price did not display a new lower low below the prior low. Looking at the market pattern also, we have a consolidation. It looks to me that the price will continue to go up at least near the median line. The only time that we can confirm that this is a true bearish stock volume signal or setup is when the price dip below the low of this, below the prior low, retest it and confirm it as a resistance level. This is the end of this tutorial. If you have any question, all right, put it below. Any suggestion, any comment, put in a comment section, and in due course, I will record another video to answer your specific question. We are the GSTW24 traders talking about was that a bearish stock volume signal. Happy trading to you all, and speak to you soon.